But what I think we're looking at right now is both a physical difficulty, particularly on the environmental front, but also a real kind of difficulty, financial and other difficulty of keeping this whole system going at a 3% compounding rate of growth. And you ask yourself the question, can this continue for the next 1,000 years, the next 100 years, the next 50 years, you know? And one of the things you immediately see when you ask yourself that question is that capital started to do some very strange things after 1970 or so. One of the things it did was that it decided that actually, rather than actually investing in things, people would start to invest in assets and asset values. So you start to get all of this speculative activity, people speculating in stock markets and people speculating in property markets and you know, commodity futures and all the rest of it. In other words, you get this tremendous kind of shift of capital into investing in what I would call the fictional side of a capitalist economy. And the other question is, well, what's the relationship between all this fictional investment that's going on and the real economy in terms of real output and real production? Just to give you some sense of this, 2 years ago, the total amount that was circulating through derivatives and currency swaps and other, you know, fictitious markets was something of the order of $600 trillion. The total output in the global economy was something like $55 trillion. So in other words, they were circulating 10 times the amount of value of real output and of goods and services through these fictitious markets. But they were making a lot of money out of doing that. People were withdrawing real money, real power, and in that year, the leading hedge fund managers in the United States received in personal remuneration in 1 year $3 billion. One of them was your good friend George Soros. He got $3 billion in 1 year. And that is, now I thought it was pretty obscene when about 5 years before, the leading hedge fund people were getting $250 million. But then they shift. Now this is in the middle of a crisis. So what you're seeing in the middle of a crisis is an incredible concentration of money power going in fewer and fewer hands, with the result that that money power is now buying elections in the United States, so that we have one party that controls Congress, and I call it the party of Wall Street. And they're deeply embedded in the Democratic Party and the Republican Party. And so this is conferring immense class power on a very smaller and smaller group. We now have only about 5 major banking units left in the United States, but they are much more powerful than they've ever been before, much more significant than they've ever been before. And you know, Goldman Sachs we now refer to as government Sachs because they essentially run the whole damn show. So what this suggests is that the class configuration is consolidating at the same time as there are real difficulties in the main economy. And those difficulties attach to the creation of these fictitious markets. And it's so interesting to see whenever a problem comes up, the answer is create another fictitious market. There's an environmental problem, a global warming problem. What's the answer? Carbon trading. So now you have carbon trading markets, okay? They're great for speculating in. They have nothing whatsoever to do with controlling the environmental question, but they're great for speculating. You know, Al Gore, who is supposed to be a great sort of environmentalist, his great contribution to the environmental cause was to go to Kyoto and say, the only solution is a market-based solution. Create a new market. That is the only solution. But it's a fictitious market. And of course it's going to be speculative and all the rest of it. So that's one of the things that's going on. The other thing that's very interesting is that as capital, there's been a double movement. Back in the 1970s, one of the big problems was the control of labour. Labour was pretty powerful at the end of the 1960s, 1970s. By a variety of manoeuvres in the 1970s, the power of labour was effectively broken, and by the time you get to about 1986, labour has been disempowered. almost everywhere, and not, you know, there's always residual places where it's not been the case, but effectively it's been disempowered. It's been disempowered in part by offshoring and by allowing capital to move very freely. But you could only get capital to move very freely if you had a kind of deregulated financial system that assisted capital to move very freely all around the world. So, you know, deindustrialization, I've already mentioned, disempowered workers in the United States and made a really radical difference. So you cured the labour problem, and the result of that is that the share of labour in national income in all of the OECD countries has declined. It's even declined in China, which means that wages and workers are getting less and less and less of the pie. The result of that is that there's a real issue then as to who you sell your product to. If workers don't have the money, then who on earth do you sell it to? And how do you sell it? Well, one of the answers was, well, give the workers credit. And so we get the rise of the credit system. The financial people go and say to workers, well, you know, you can borrow to do this and that and that and this. And so household debt in the United States and Britain has tripled over the last 30 years. But real incomes have not risen. And so there's this kind of gap, as it were, so that an effective demand problem starts to emerge within the system. Now, the effective demand problem also poses something else, which is very, very interesting. If capital just produced things, the effective demand problem would have been very, very, very serious. For instance, I'm still using the forks that my grandmother had made in Sheffield in, I don't know, 1860. Now, if capital made things like that lasted, then, you know, it wouldn't have a market after a bit. I mean, we'd all have our forks and that would be it, you know. I mean, there would be a little market associated with So capital has started, and has been doing it actually for some time now, doing a number of things. One is they make things that break. The other thing is that they make things that get, you know, very quickly rendered obsolescent. I mean, computers are great. I mean, if you sit and you have a computer that's more than 3 years old, people look at you like, you know, what's the matter with you, you know? I mean, you haven't got one of the fast ones yet, you know? I have this old Mac that sits on my desk from about 15 years ago, and people go, oh my God, look at that. So you get the high turn, and then you get the high rate of innovation, iPods and iPads and so, you know, all this kind of stuff. But then the other thing, it turns out, is very good, is to invest in spectacle. That is, the production of spectacle is instantaneously consumed. And actually, this has actually transformed much of what urban life is about, is the production of spectacle. And I think Guy Debord was very prescient when he started to write in 1967 about the society of the spectacle. But he wrote about it from a critical kind of perspective, and I don't know whether the capitalists read it or not, but if they did, they'd say, yeah, that's a good idea. Why don't we go off and produce spectacles? And the result is that actually the spectacles get more and more spectacular. Vast amounts of money get spent on the production of a spectacle. The simple example here is look at the opening ceremonies of Olympic Games over the last 30, 40 years. Look what an enormous spectacle it's become, and how much money is spent on it. And what's interesting is most of the cities that run it go bankrupt afterwards. And it's no accident that Greece, at the Olympic Games, has gone bankrupt since. So it's, well, I haven't quite gone bankrupt, but you know what I'm talking about. So the spectacle starts to become, as it were, a foundational kind of thing. So this actually then affects the way in which urban life gets led. Urban life is reprogrammed around the idea of continuous spectacle. And actually what is amazing about this is increasingly people are lured into being the spectacle. I mean, reality TV, all of those kinds of things, becomes the spectacle. People become the spectacle. And they make a spectacle of themselves. They do so on Facebook. I mean, you know, you should just go on and see some of the things people do to themselves in order to get paid attention to on, you know. So the spectacle becomes, as it were, kind of almost a feature of contemporary life, which becomes foundational to what people do and how they spend their time. And again, it comes back also to what kind of political consciousness arises in a world where people are simply making spectacles of themselves on Facebook. I mean, you know, so the dynamics of capital, it seems to me, have to be paid attention to, because as that dynamic works, so it periodically runs into these huge crises of the sort we had in the 1970s and the one we've had over the last couple of years. And I'm sometimes asked, you know, well, is this the end, is this crisis mark the end of the neoliberalisation project? And my answer is, well, it depends very much what you call the neoliberalisation project. There's a theory to it which only lasted about 2 or 3 years. There's a practice to it. And the practice, the foundation of the practice was actually defined in 1976 in New York City and then later on in Mexico in 1982. And the practice of neoliberalisation was about getting people into debt, then going to them and saying, well, you know, in order to pay off your debts, which you owe to the investment bankers, you have to go through something called structural adjustment. And in the Mexican case, it was a combination of the Federal Reserve and the US Treasury and the IMF that bailed out Mexico in order to secure the New York investment banks. In other words, you bail out the banks through government activity. And then the structural adjustment says the people then have to pay. So what we've gone through is, of course, a phase in this crisis where there's a lot of bailing out of the banks. It's still going on to some degree in Ireland right now, which is then associated with a fiscal crisis of the state apparatus. And then everybody says, well, this fiscal crisis, look, we've got this fiscal crisis. How are we going to deal with it? Austerity. In other words, sock it to the people. And that was the formula of neoliberalisation that was set up around 1972. Save the banks and sock it to the people. And that is exactly what is going on. And the only interesting question is, when will the people rise up and say, forget it, go sock it to the bankers? You know, we have to do something along those lines. So the neoliberalisation project is not necessarily at an end at all. If anything, it's consolidating and deepening. The only thing that has happened is the legitimacy of the project is seriously under question. That is, the storyline that free markets, free trade, you know, all of that, and personal responsibility is going to take us to the promised world, that the process, utopia, of the neoliberal project is going to bring us to this wonderful, wonderful world in which we're all going to be much better off. That storyline is very hard to maintain anymore. But the fact is that the ruling elites don't care about that storyline. They never did. They always knew it was completely wrong, because as far as they were concerned, the whole storyline was actually sat out there for everybody to listen to and say, oh yeah, okay, all right, one of these days wealth and good, you know, good material living standards will come to me, but not. But in effect, what happened is it just was absorbed by the incredible concentration of wealth which was already occurring in the 1980s and 1990s, and now has gone really, really, really obscene. Right now, for example, the number of billionaires in India doubled in 1 year last year. The wealth of the wealthiest in the United States has really, really concentrated. So we're facing increasingly class domination, which is so obvious and so kind of rampant. And they're doing all of the kinds of games they usually do by, you know, funding the Tea Party and all of those kinds of crazy groups they can find in the United States to try to disrupt politics, at the same time as they basically are regulating Congress, so Congress doesn't do anything at all. So here is the situation. And it seems to me that this is the situation that when you start to see it very clearly for that is what it is, then surely your mental conceptions will have to change. But like I said, working on mental conceptions is only one aspect of it. One of the things the left lacks is not only a sort of a proper set of mental conceptions to actually confront what is going on, but what the left is lacking in many ways is a programmatic way to start to think about the transformations of technologies and production systems and governance systems and institutional arrangements. It doesn't think about those things as a coherent project.